Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the weekly bullish scenario where we're looking for a simple impulse to the upside. 1, 2, 3, 4, 5. Currently working on this wave 4, which preferably is not yet finished. Common target is between the 236 and the 05 Fibonacci, taken from the low to the high of 3. Giving you a target between 57.1k and 42.8k, with the invalidation being the 0.618 at 37.7k. A wave 4 of a higher degree, being the yellow wave 4, prefers to retrace to the wave 4 of a lower degree. That is a guideline in Elliott waves, but as you can see, the current low over here has not touched this white box between 49.1 and 38.5k, so preferably price still dips towards the downside. And also, if we use a trend channel taken from the high of 1 to the high of wave 3 to the low of wave 2, then what you can see is that we have touched the lower end of the trend channel, but preferably for a wave 4 we do break out of this channel, and also preferably for a wave 4 you hit the price action of a wave 4 of a lower degree. So to increase the probabilities for this scenario, we preferably like to see a longer sideways corrective structure on the daily time frame, which is what you see here. So in this particular scenario, we then have a finished wave W or A structure here in a zigzag, looking for a wave X or a wave B to the upside, and then another move to the downside in a wave Y or a wave C. Now, most commonly wave X or wave B is a zigzag structure, a 5-3-5, so we can then look for an impulse to the upside in a wave A, look for a 3-wave corrective structure in a B, and then another impulse to the upside in a wave C. The ABC structure you see on my chart is, by the way, a flat structure, A, B, and then a wave C, where you take out the all-time high and then you take out the low at 53k, and the WXY is a sideways double combo, but in both cases we still look for a continuation of the trend. The more bullish scenario on the weekly time frame is a double 1-2. So in this case, we then have a bigger 1, 2, 3, 4, 5, and inside the yellow 5-wave impulsive move, we count the green count 1, 2, 3, 4, 5. So a double 1-2. You still expect a very big wave 3 towards the upside. So this one is a lot more bullish, but what does help with the probabilities for this particular scenario is that the wave 4 of the previous scenario on the weekly time frame did not touch the price action over here and hasn't yet broken out of the trend channel. Now here we also have a sideways wave 2, and this wave 2 over here is arguably quite sideways as well. There's not really alternation with regards to how deep the structure is, and this would give a little bit of probabilities at least to a potential double 1-2. Because in an impulse 1, 2, 3, 4, 5, you do tend to see alternation, which means if wave 2 is very shallow, very sideways, wave 4 tends to be deep, but it is not at the moment. We do have a alternation in structure, a flat into, zigzag into, so that is something. And it does have to be said that if a wave 2 is a sideways structure, a wave 4 still has 78% chance to be a sideways structure as well. So it's not really in favor of a wave 4 to be a very deep structure, but nonetheless, rule of alternation is a thing in Elliott waves, and this is definitely a scenario we got to keep in mind. Now, what makes life easy is that both of these higher probability scenarios compared to any bearish scenario means you're going to take out the high, and then it's all about observing the range. In this scenario here, we look for a much bigger range to form somewhere in the target area for your wave 5, and then a drop to the downside, while in the more bullish scenario, you just want to pump. You don't want to create very big sideways ranges over here, right? You just want to move towards the upside, move out of this double 1-2, start at wave 3, see a high amount of volume coming in, move up, small range, move up, small range, move up, small range, etc., right? And this is the big difference between the two. Here you continue pumping on a high amount of volume, only small sideways ranges. You don't want to see more of these very, very long sideways ranging structures, because then we're going to be looking for 4 5s, right? 1, 2, 1, 2, 3, 4, 5, 4, 5. If these ranges preferably are longer in time than the price action we have for the wave 2s. A scenario that fits with the continuation of this trend towards the upside is the bullish scenario on the daily, finished zigzag ABC, hitting the target perfectly, moving up in your wave 1, then a 2, and continuation to the upside. A common structure in a wave 2 is a zigzag for a 535. Common target here is the 05786, taken from the low to the current high that we have on the chart, 61k to 56.7k. And then we look for a continuation to the upside with a very clear invalidation being the 53.5k low. If we then zoom in to the 4-hour time frame and take a look at this impulse here, then the first scenario I'd like to show you is a finished impulsive structure, so a leading diagonal in 1, and then a 2, 3, 4, 5 finished. Look for a bigger correction to the downside. Now the common target for your wave 2 is the 05 to the 786, taken again from the low to the high, 61k to 56.7k. What does lower the probabilities in this case is that your wave 2 is incredibly short compared to your wave 1 in time. You can see wave 2 is only like a blip basically, and also wave 2 is very shallow, and after a leading diagonal you would expect a deep retracement. Also, a leading diagonal does have a lower probability compared to a double 1-2, so that is something we have to keep in mind. The other scenario is then also that double 1-2 impulse, 34545, looking for one more high to be made in this bigger wave 1, and then start a 3-wave correction to the downside in wave 2. If price moves to the upside, we have some interesting resistance, 69.1, 69.7, and around 70.9k. Currently in the support box here, 63.6k to 64.8k. Quite interesting, because last night we were talking about price still preferably moving towards the downside to hit the support, but also in this particular scenario to break out of the trend channel, taken from the high of your 1 to the high of your 3 to the low of your wave 2, and you can now see that we broke out of the trend channel. That's something that we like to see, and also increases the probabilities for a wave 4. It does help with this particular scenario, but now we're at support, so it's all about observing the reaction while at support, right? But in this case, we're looking for one more high. Now here's the base channel. We also got quite close to the base channel, taken from the low to the low of 2 to the high of 3, which is also what you like to see, and I just explained the trend channel we just broke out. With regards to news, we have some high impact news today, so make sure you trade safe. 2:30 p.m. Central European Time, and also tomorrow 2:30 Central European Time. Some more high impact news here, so again, make sure you trade safe around these hours. And if we then look at the probabilities of the different scenarios, and on the weekly time frame, at the moment a double 1-2 would have some higher probabilities compared to a single impulse to the upside, also because of the channeling that we've done on that particular time frame. On the daily time frame, the probabilities are higher for the bullish scenario compared to the bearish scenario. We're looking for an impulse to the upside here, then a retracement to the downside, and a continuation. And with regards to the impulse to the upside, at the moment the higher probability is an unfinished impulsive structure over here to the upside. A double 1-2 has a higher probability compared to a leading diagonal. In the leading diagonal scenario, your wave 2 is incredibly short and also quite shallow for a leading diagonal in a wave 1. And at the high, if this is your high and you look for a bigger move down, you did hit the 886 here, which does increase probabilities for corrective structures to the downside, so something that we have to keep in mind. However, in both of the cases, you're looking for price to move down, right? In the bearish case, you look for a straight move to the downside for 2, and in the bullish case, you're kind of also looking for a move to the downside. We are in wave 3, 4, 5 price action here, actually 4, 5 price action, so we are starting to look for price to move towards the downside, which is interesting from a swing trader's perspective. Now we are at support over here. We just hit the support area, so we just need to wait for more price action to form at support to get a bit of a clearer idea of what's gonna happen. But it is now interesting to at least observe the reaction over here. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Wave Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.